So, good afternoon, everybody, and welcome to Marcellus's Little Champs webinar. So today we have a company that has made a lot of money for our clients over the last 4 years, and we are privileged to have Tarak Patel here. Tarak Patel, as everybody knows, is the managing director of GMM Pfaudler. So I have the rather superfluous job today of introducing Tarak Patel. And the way if I was in a cocktail party with Tarak, I would say meet one of the few people in India who have quadrupled revenues in the last 3 years. I don't know whether there's too many people who've done that. Tarak Patel and GMM Pfaudler, to their immense credit, have quadrupled revenues. I think before 3 years ago, when I first met, 4 years ago, when I first met Tarak, revenues were around 500 crores. Now they're gunning out around 2,500 crores per annum of revenues. Beyond being the managing director of GMM Pfaudler, Tarak is also a keen scuba diver. He's keen about protecting marine life. I didn't know that till we did some research on him. He serves on the board of Reef Watch Marine Conservation and the Charutar Arogya Mandal. In terms of education, very well educated, University of Rochester, BA in economics, and then an MBA from London Business School and Columbia Business School. So welcome to our Little Champs webinar, Tarak. Thank you very much for making time for this. I'll now hand over to the Little Champs fund manager, the smiling assassin, as promoters call him, Ashwin Shetty.
Yeah, thanks, Saurabh. Just a correction, actually, it's a Rising Giants webinar. Even though we owned GMM Pfaudler across both Rising Giants and Little Champs portfolio. So really a pleasure, Tarak, to have you today with us. But before I start with you, just a couple of points I have to make. One is that obviously we own at Marcellus, we have invested in GMM Pfaudler, as Saurabh said, across all our portfolios. And Saurabh, Salil, and me have, in our personal capacities, invested in Marcellus funds. So we are also the shareholders of GMM Pfaudler in our personal capacities through our investment in Marcellus portfolios. And secondly, just to give outline of the session, so we have Tarak till 6 p.m. Today. So we will have we'll divide it into two parts. So initially, we'll ask him some questions surrounding the acquisitions, which has been one of the important growth strategy for GMM Pfaudler. And then after 20-25 minutes, we will ask the questions put forward by the audience. So that will be moderated by Salil. So if you folks can just put your questions to Tarak in the Q&A box, it will be very helpful. So Tarak, the reason for choosing the dwelling deeper into the acquisitions as a strategy for GMM Pfaudler is, as Saurabh said, the revenues of GMM Pfaudler has increased multifold. So if I get my numbers right, so the revenue of a GMM Pfaudler was around 300 crores in FY16. That has gone up to 2,500 crores in FY22. So nearly 8x. And if I see one acquisition itself, a Pfaudler International acquisition, has contributed nearly 75% of this incremental revenues. And if I, in fact, consider other acquisitions, it will be significantly more. So given that acquisition has been played an important role in the fortunes of GMM Pfaudler, particularly in the recent years, so we thought that we will dwell deeper into this aspect of GMM Pfaudler. So maybe a good starting point would be to understand, the key rational thought process across various acquisitions. Maybe start as early as Mawak, which we did in FY 2008. I think it was your early days in GMM Pfaudler, and then the more recent ones like Pfaudler International, DDPS, and so on.
Firstly, let me thank you guys for having me. It's a pleasure to be on this chat with all of you. Just one complaint that I have on a lighter note is that not many people know us today as GMM Pfaudler. We are known as Mr. Saurabh Mukherjee's chemical picks. So I think that's the only downside now. I've lost a little bit of identity since our company was part of the Marcellus portfolio. So hopefully we can get our identity back over the next few years. But really nice to be amongst all of you, and thank you for having us. So maybe I think starting a little bit about acquisitions and how it's played an important role for us here in GMM. I think aspirationally, we always had an aspiration to kind of become a multinational company. For a company, especially in the engineering space, there's always the aspiration of kind of exporting, right? Exporting is obviously very lucrative in terms of margins. And from very early on, we always wanted to kind of enter into European and US markets, right? Doing it directly from India, obviously, was a bit of a problem because, one is that by the nature of the business that we're in, a lot of travel needs to happen. Customers need to come to India. They need to come and visit our factory multiple times. FATs are done here. The final checks are done here. So having, a local manufacturing or a local kind of a factory in Europe or in the US is always very, very important, right? So you get the best of both worlds. You get the low-cost manufacturing of India, but at the same time, you get local representative, a local person, a local factory that you're dealing with, right? So the comfort levels will increase significantly. So from very early on, I think that was the idea. And to get a foot in the door in the European market, we did our acquisition of Mavag in 2008. That company, when we bought it right before the financial crisis, was about a 4 or 5 million Swiss franc company. Today, it's about, it has a backlog of close to 43 million Swiss francs, right? So that company, we've not added a single person. They still have about 30 employees, but we've grown revenues about 5 to 6 times, right? So incredible success story for us, especially in a very high cost country like Switzerland, right? So as you know, Europe itself is quite expensive and Swiss is obviously much, much more expensive. I think for us also, it's kind of important to realize that for us, especially a company like us, Pfaudler, which is, predominantly in glass-lined business, it's very important that we add and enhance our product, the portfolio through acquisitions. Being only a glass-lined player would obviously limit growth. And then it would obviously, kind of make it a much more riskier prospect for everybody when you have only one product going into either the chemical or pharmaceutical. So for us, and I think for the Pfaudler Group internationally also, enhancing the product portfolio was very important. And that kind of consisted of complementary products, which obviously go into the same factories that our glass-lined products go into, but then also kind of going up the value chain. We're trying to now get into process know-how. So with like acid recovery, with this new acquisition that we did in Italy, and then with the services, right? Services, again, is very lucrative for us. We have a very large install base, more than 50,000 equipment around the world. So growing that part of the business becomes very, very important for us. So for us, M&A has been, we've done 7 acquisitions since 2015. We have a couple of more lined up, very interesting acquisitions as well, something that will really kind of enhance as well as change the size and the scale of the company going forward.
Great. And one thing I wanted to ask you, Tarak, was we did Mavag acquisition way back, in 2007-8, and then there was a long gap, and then from 2019 to 22, as you said, we have done 6 acquisitions. So what has changed in the corporate landscape that so much targets are becoming available for acquisition, and secondly, what has given us confidence, particularly in the recent years, so to do this slew of acquisitions that we have done?
So I think every country has its time, and I think it's India's time now for sure. China had maybe 10, 15, 20 years ago, they did a lot of acquisitions in Europe, especially in Germany. The companies in the cement mixing space, a lot of Chinese companies were coming out and buying companies and assets in Europe. I think today it's definitely India is the flavor of the month. I think Indian companies are looked at very favorably. I think our standing also across the world has changed significantly. So there's no longer looked down upon when an Indian company actually approaches you today. A lot of companies actually reach out to us. We've been getting kind of inquiries through consultants and through investment bankers for acquisitions as well. And India is definitely and has moved up in terms of being able to acquire and make good owners, right? For us, especially with the Pfaudler Group, we've been with them for more than 30 years, since 1988. So it was really a no-brainer for us. And I think one of the questions that I get asked a lot is that Indian companies haven't been so successful. And I'm sure one of the questions that you will ask me later on will be around that. So I don't want to preempt it, but I think people are rooting for good companies, long-term strategic investors, not short-term I think they want a long term because people want to see and they want stability, right? I think that's what really the people are thinking about. And once you're part of a large group, then you really have that kind of foundation to really build upon, right? So I think that's something that we give some of these smaller companies, and that's why it's interesting for them to become part of our group.
And in particular, Pfaudler International, which was a significantly bigger entity compared to GMM. So in that specific case, acquiring such a large entity, so how did you go about it, in terms of thinking about the risk and return thresholds, etc. This.
Yeah. So again, I think, Ashwin, it was natural for us, right? We always kind of had, this idea that one day, hopefully either we kind of buy Pfaudler stake back here in GMM here in India, or we kind of acquire the Pfaudler group, right? It's a niche business. Again, there are not too many suitors for a company like ours. So I think we were a natural buyer. And since 2015, when Pfaudler got taken over by DBAG, a private equity fund based out of Frankfurt, Germany, they kind of looked at us as long-term strategic investors, right? And they wanted to pass the company on to somebody who would kind of look at the long-term growth of the company, would invest in the company, would really look at growing the company, right? So I think we fitted all the and we ticked all the boxes for them. This transaction we actually started talking about right before the COVID hit. So it was really, really the worst timing that could happen. And we did this entire transaction. If I remember correctly, we started sometime in February 2020. And over the next 6-7 months, we did all the negotiations, the paperwork, multiple jurisdictions. We had lawyers from both Europe, US, UK, India, and many other jurisdictions. And I mean, just thinking about it now, I have no idea how it got done, but it got done, right? So it was very complex. And doing a negotiation for such a large transaction over Zoom, not the easiest thing. You don't get body language, you don't get reactions, but in hindsight, it got done, and it got done quite well. And I think since then, I think the really heartening part is that the business has really turned around, right? So when we acquired the business, $175 million. 1 year after acquiring them, they clocked around $225 million. For a European business to have 20+% growth is fantastic, right? And even this year, if you see the quarterly results, they've been doing exceedingly well. The 2 new factories that we have in China and Germany went from loss-making to profitable. The momentum is picking up. The order intake continues to remain very, very strong. So all in all, we've been very pleasantly surprised. Most of the synergies that we are expecting have come much faster than expected as well. And, it's just a great foundation to build on. And on the soft, in terms of people and the softer side of things, I think the reaction has been fantastic, right? People are so happy. I think they were all rooting for us. They wanted somebody who, understood the business, would invest in the business. And I think that's what they got, right? So I think overall, it's been a great success for us.
Yeah. And generally some insights into how the whole M&A process works in GMM Pfaudler, like say there'll be a lot of companies that may be coming into as a target, but what are the key parameters that you look in? How is the overall basically decision taken before you pull the trigger?
Yeah, so I think we're trying to structure this process more. I think it was kind of done a little bit in an unstructured manner, but the top management would really drive some of these discussions and interactions and things like that. But from a board standpoint, we've also been pushed now to kind of look at specific areas that, will add long-term value for the company. We've always been against acquiring market share, because market share, something that when you acquire, you pay a lot of money for, but you don't end up getting all of it, right? So I think areas where we want to focus are obviously technology. If there are complementary products that can really add to the portfolio, or new markets that we currently have no presence in, right? So those are the kind of broad areas. We have bought the capacity in past. We have bought out a competitor here in India, but it was an asset deal. And that gave us ready-made capacity in Hyderabad, which is obviously, a very important market for us. We also kind of acquired another factory in Ahmedabad recently. That was, again, the enhancement of manufacturing the capacity for our heavy engineering business line. So we've done that here in India because, it's actually speed is very important, right? How quickly can you put up these facilities and start manufacturing versus like spending 2 years buying the land, putting up a new facility, then you kind of lose that window, right? So speed was important for us. But overall, I think the idea today is to really add technology. We've done that with the acid recovery business. We've now done that with hydro air research, which is membrane the technology, entering into new areas like bioplastics, green technologies, mock meat, things like that, right? But otherwise, I think the idea is to really focus on something that will add value. And we want it to be complementary, right? So we don't want a whole new different sales force coming in, new people, new regions, new markets that we don't understand. We're trying to focus and remain where we currently have a very strong footprint in.
Okay, great. And while the target may look good from the outside, but when you actually acquire it and start integrating, you actually come across a lot of kind of issues. So in this context, any challenges that GMM faced, integrating particularly the entities in diverse geographies, any learnings, any challenges?
Yeah, so I think there were a lot of learnings, but I think the way that we did it was we kind of allowed success to build success. So we were not overimposing when it came to kind of the pushing these synergies and initiatives down anybody's throat. We wanted people to kind of see these benefits come up themselves and then kind of build on that, right? We obviously set some KPIs. We had review mechanisms. We had a steering committee. We had regular reviews. We also had an incentive program where we kind of aligned a lot of the senior managers across the globe through an ESOP program, right? So 47 employees now directly have alignment directly to GMM share price. So they are incentivized and motivated to kind of build on some of these initiatives that we've been speaking about. But I think some of these things came naturally to them because they were already facing problems selling into certain markets where now product made in India or from Brazil or from China becomes much more easier to sell, right? There is a price conscious market where Pfaudler doesn't have a strong presence, and these markets can really be penetrated by product coming in from lower cost countries. So that's worked out quite well. The complementary products obviously is great now because the idea of a sales guy is to really shake the tree and kind of get us as many inquiries. So that's working out quite nicely. And I think, just having global alignment between the different geographies kind of helps us. So I think, maybe just for an example, I'll kind of give you maybe two examples where the whole strength of the group has really worked out quite well. One was a large project in the US, a latex manufacturing plant set up by the government there. This was because of COVID, and they actually wrote to Pfaudler US saying, listen, we need these glass line equipment. It's going to be a very fast track project. We need it in 8 months. Can you do it for us? And Pfaudler said, unfortunately, no, we're booked out. We can do it for you, but it's going to be 16 to 18 months, right? Which was completely not acceptable. However, they gave them an option of buying it from India, and they were okay with it. And all these equipment were completely made in India, shipped from India, sold by the local sales force in the US. The servicing will be done locally, and we got the same prices that a US made equipment would get, right? So fantastic margin for the group. Similarly, we kind of recently got an order for about $6-7 million from a company in China called Hengli. Again, local Chinese sales force. The process engineering came from the US, and the manufacturing is done here in India, right? So we can really give the customer what he wants. In this specific case of China, the two other competitors were from Europe, and they were about 25 to 30% higher than us. And here, it works out well when the entire group has come together, and the manufacturing done locally in India gives them the cost advantage. So overall, we would probably make a lot more margin than if we had made these equipment anywhere else. So really a lot of different kind of things coming together. And I think the idea is really the flexibility that we can offer as a group. And I think people have kind of taken to that quite well. And there's no saying no now, right? There's no option of no. We can always find the right solution for you.
Great. And coming to the management side, one of the biggest reason why most of the M&As don't work is there is no adequate scale up on the management bandwidth side, where the focus get kind of diverted across many geographical units. So in this context, how has GMM rejigged the organizational structure to manage a much bigger and geographically spread and complex organization? So any thoughts on that?
Yeah, so I think just to reiterate again that we haven't lost a single employee since we took over. So that's a great sign. I think the people wanted an owner like us, and they feel very comfortable continuing to be part of the organization. So that's a fantastic sign to go and to move forward with. What we've done, Ashwin, is we've retained management, right? So the European team and the international team rather still remains the same. We have a CEO and a CFO internationally, and we have a CEO and CFO in India. Maybe going forward, that's not the perfect solution, and maybe we would have to rethink about that. But for the time being, until stability is still the most important part for us, right? So to have stability, and many of these acquisitions were done by the management in Europe, so they need to be responsible for turning these things around. At the same time, the Indian team is more focused on the acquisitions here in India, the Vatva acquisition, the Hyderabad acquisition. So I think we've kind of separated the tasks quite well. But the good thing about these acquisitions, besides the Pfaudler acquisitions, are they're quite small, right? They're in the 5 million odd range, $5 to $10 million range. So the risks are not that high, and they're smaller teams, right? So we don't have to deal with very large groups of people. So the integration, I think, has been quite smooth. I mean, some of the deals that we've done, we bought Interseal, it was about $3 million. Today it's $10 million. We expect Hydro Air Research, which is about $8-9 million, to be about $20 million in a few years' time, right? So small size and scale, but good potential to increase the revenue, grow the revenue, and increase the revenue at least 2 to 3 times. That should be the target.
Good. And what is the role of Tarak in the this reject organizational structure?
So I think the role of Tarak is to, like you said, go and have some beer with the folks once in a while, kind of give them a pat on the back, and just make sure that they feel that, you know, management is involved and management is kind of, supporting them. I think that's important. So I think most of the factories that we've been to, we end up having a barbecue, a lunch, or a dinner. So kind of get down to the worker level and really meet people and tell them that, listen, we're not here to change a lot of things. Don't worry. We're not going to move all the production to India, give them some job security, let them know that we'll be investing. I think that's another very positive thing that we've done. We've seen investments, and these factories have not been invested in for many years, right? So a new furnace in Brazil, a new furnace in the US. In China, we did a kind of a project to kind of improve throughput. We've given a new capacity in Germany as well, right? So when a worker or when a factory level person sees this, it's definitely motivating, and they finally feel that now somebody's reinvesting in the business, versus in the past where it was just lay as low as you can and let's get on with as much as business as we can, but don't need to really step up and kind of go that extra mile.
Okay. And Tarak, you talked about these acquisitions plugging a lot of product gaps that you had, even geographically speaking. But still, anything that you find in where there are still spaces for you to fill in kind of in your portfolio.
Yeah, so I think we have a very clear idea in terms of creating a new platform. I think we have obviously the glass-line platform, the non-glass line, the systems and services. Currently, we are working on creating one more platform that I believe personally can become as big as glass-line. That's something that we are working on. We have a couple of opportunities that would make us a global player. There are maybe one or two global players, and I think there is a vacuum in this space, and I think that's something that we're working on. Hopefully over the next few quarters you will hear from us on this, but again, from a margin profile, from a complementary product, and the technology product, I think it's a nice product to have, and hopefully we'll be able to close out these transactions in the near future.
Okay, and just the last question from my side before we move on to the audience question is, given the spate of acquisitions we have done in the last 2 to 3 years, will we be kind of consolidating for some time now? I think you talked that there is something in pipeline, but generally speaking, will we see some be consolidating and taking a breather?
Yeah, so I think as a group, we've kind of realized that we'll now kind of only make acquisitions when they're completely necessary and they really add value. But again, like I mentioned, it's not taking away that much bandwidth currently, right? These are small acquisitions. Like even the Hydro Air Research has 11 people. They have no manufacturing. So we don't have to worry about any of that. They will just continue to get more orders. What they want is leverage of the global network, which they will get. They want low-cost manufacturing in India and China, which they'll get. So there's no real bandwidth there, right? The local guys and the person that we kind of did this acquisition with, the CEO, is very capable of growing the business. And he needs only maybe a few engineers that kind of can add another $4 or $5 million worth of sales. So these are small acquisitions and quite easy to kind of grow to double or triple in a short period of time.
Okay, thanks, Tarak. Over to you, Salil.
Thank you.
Thanks, Ashwin. Hi, Tarak. There are a lot of questions coming in. We'll start with one a big picture question. This comes from Anirudh Datta. And he takes off from the statement that you made about India's standing is changing, right? So his question is that, what were, say, some of the disadvantages or handicaps that Indian companies had, say, 10, 15 years back? And what has really changed for Indian companies, specifically for say, companies in your space that led to this confidence of now going and scaling up the business? Are there any specifics that you can think of?
So I think from a brand India perspective, I think India is now definitely more acceptable. I think generally Indians across the world now bring a lot more power and I would say status now. Also, like, maybe earlier on, just traveling to countries, Indians had more maybe the difficulties, but now, even with the passport, the visas available, it's just a lot easier, right? But I think from a standpoint of having large multinationals from India that have made acquisitions internationally, the size and scale of Indian companies that have now kind of grown into, I think that's something that obviously has, the people around the world have noticed this. So it's something that will continue to kind of improve and increase. But I think what we've also done is our quality levels have improved significantly, right? So, we no longer kind of produce the quality that was not acceptable in European markets. We have the skills and capabilities. All the car companies, the forging companies that export into Europe and Germany, our pharma companies that export into Europe and the US, the chemical companies that export into Syngentas and the Bayers and the BASF of the world. We now have an acceptable kind of quality level, right? So that makes it a lot more interesting. But at the same time, I think even access to capital, right? I think Indian companies today can leverage their balance sheet to make these acquisitions. So it's not that we don't have the financial muscle, which we do now, right? I think that has been a big game changer because early on, even to make small acquisitions was kind of tough. But today, companies of even the smaller sizes today can make acquisitions across the world. So I think that's something that has changed as well.
Right. And another part of Anirudh's question is on, I think you alluded to technology evolving in India, right? The quality parameters being acceptable to Europe. Now, a lot of that earlier, we were constrained with the fact that we did not have the technology in India. Because today, what capital goods, equipment, machineries that you import today, has that proportion changed over the last 10 years? Or do you think we are still deficient in some of these areas?
So I think India has always been different. I think if you compare India and China always used to buy equipment from Europe, right? Even today, 30% of Germany's output, Pfaudler Germany's output goes to China, right? While in India, I think Indian companies do not buy any European glass-lined reactor, right? So everything is made locally. So that's always been a big difference between India and China. But today, to be honest with you, when we have foreigners visit our facility here in India, they just get blown away, right? So our India facility is probably the best facility in the group. And this was not the case 10, 15 years ago. We make 250 equipment a month, while this is more than the rest of the Pfaudler group put together, right? So in terms of size and scale, we've completely kind of changed the way that we manufacture these. It's crazy, right? So even today, when I was in Germany or the US, they still have those, weekly meetings where they all stand on the shop floor. They have this big board and they move these round kind of red dots across. We don't even meet anymore. We actually just do everything online. We have a Google sheet. People fill up their stuff. People don't meet at all. And this is when we make 220. They meet when they make like 5 or 7 or 10 equipment a month, right? So from that standpoint, I think Indians have really changed. And I hear this with a lot of companies, companies like the Motherson Sumi as well. Their manufacturing facilities are world class, right? And now we can teach the rest of the world how things should be done rather than the other way around.
Yeah, that's interesting. Right. Tarak, the next question is about, appetite, or I would think it's about risk-taking appetite. Now, DDPS, whatever were local, something which, you could have managed this, they're near shore. right? Acquiring a parent is probably one rare example that we have seen here, right? Now, when the proposal came up within the company, either at the board level or the executive level, I mean, how did you guys have the, if I could use the word, guts to really go ahead and do that? And what are objections, if internally, the risk that you thought of?
Yes. No. So obviously there's always, being a very conservative family. I mean, we used to be debt free, right? We didn't take a single rupee of debt until we did this acquisition, right? So there's always sleepless nights, but I guess, you just have to take that leap of faith, because otherwise you can't really change your size and scale. We were an India-centric company. We would have always, kind of remained that way. Like, Saurabh said in the beginning, we've grown revenues 4 or 5 times. We would have never been able to that if we didn't kind of take that little bit of risk, right? But again, I think it was a measured risk. I think what really worked in our favor was we knew the people, we knew the business, right? So it wasn't that we were going to find a lot of skeletons in the closet. We knew that it's not going to be something that we don't understand, right? We know glass-lined so well, and we've been working with them for so long, so we knew where all the issues were, right? So I think it was a calculated risk, but if we had to buy a company of this size and scale that we had never worked with, I think things would have been very, very different, right? Knowing Pfaudler for more than 30 years, I think that really, really helped us kind of take that final decision that's saying that, let's go for
it. Okay, here's a question. There are a couple of related questions. One is from Ashish Arora. And you specified about what technologies or products or new markets that would be the considerations when you look at an acquisition, and not necessarily market share. But when you talk about financial parameters, so I mean, do you have some, say, a payback period or a targeted return on capital, ROI metrics that you look at? And in case of where you are today, how do you see that, or these numbers panning out, say, over the next 4 or 5 years?
Yeah, so I think at least, 3-year payback is something that at least at a minimum level is what we're looking for. But most of these kind of turn around much, much faster, right? Since they're quite small. And I think as soon as you get the Pfaudler brand and the Pfaudler global network, the inquiry levels, the opportunities just increase maybe, 4 or 5 times, right? And then kind of using the local, sales force to kind of close out some of these deals, you will see a significant improvement, right? So I think even without trying, in some cases, you will just see the kind of business, the opportunity levels, the inquiry levels to increase significantly. The idea is to be able to kind of cater to these, right? Because as soon as you get a lot more inquiries, you need to hire a lot more people to kind of put out these, offers on the table. So I think we'll be a little bit careful. And again, salespeople by their nature will kind of bring you everything, but you need to really pick and choose the ones that really will, your chances are quite high of winning that business, right? So I think we're being a little bit careful on that front. But in terms of payback, I think 3 years is something that we're looking for. When we do asset deals like we did in Vatva and in Hyderabad, I think we had mentioned 6, 7, maybe 9 months for startup, but we got them up and running in maybe 2.5, 3 months, really, really much faster than expected. Even in Hyderabad, we were expecting a much longer turnaround period, but it was, way quicker than expected. And that kind of really helped us grow our market share in the South as well. Similarly with the Vatva, within, I think, 2 or 3 months, we were ready to go. So I think in all cases, we've been quite proactive and we kind of pushed just to make sure that we get the factories up and running. Otherwise, it's just the capacity going waste.
Yeah, right. And related to this is a question on, you mentioned for, say, Pfaudler International, you go there, you talk to the people, make sure that basically you don't disrupt, right? That's the what they're doing. But in India, when you're acquiring these facilities, both DDP as Vatva had been through serious trouble, right? So operationally, what do you really need to go and do where instead of a 9-month target, you can turn it around or get it up and running in 2.5 months? So if there are any operational, specifically some people that you send, framework that you have?
Yeah, so we had a lot of interaction between our folks in Karamsad and Hyderabad. And I think the first month that we had production, or the second month that we had production in Hyderabad, we already kind of crossed the numbers that the older owner had throughout its 10-year career here, right? So we were kind of surprised that, I mean, it's not rocket science, but I don't know what we did differently. I guess it was just kind of having the right people and the motivation, right? In the first year of production for the whole year, I think we doubled the revenue, the maximum revenue that they've had since they were here and since 2012, right? So in 8 years, what they could do, we did in a matter of years. So there was regular interaction. We also kind of used Karam sir to drive some of the processes in Hyderabad to set that up. We transferred a lot of people. So we had a strong team of young MBAs and the engineers that were working in operational excellence in the Gujarat facility. We transferred 3 of them in Hyderabad full time. And then obviously we brought in local people as well, but we had regular interactions and travel between the 2 facilities. Early on, we were ordering material in Karamsad for Hyderabad, but now everything's independent of each other. But yeah, definitely a lot of help and support required to start up. But now I think they are kind of independent and they continue to perform quite well.
Right. Tarak, Pfaudler International, right? You mentioned that it has turned out to be, the turnaround has turned out to be pretty well. But now, do you see risks emerging, fears of recession, energy crisis, China, not really sure what's happening within the country. So maybe should you be worrying more about these acquisitions now and maybe had a good period already that's coming to an end?
No, I think there's obviously uncertainty. I think energy costs in Germany and UK are definitely a concern, but I think like with every business, there'll be ups and downs, but I don't see this to be a long-term issue. I think we've taken steps already internally, both in terms of controlling cost, reducing maybe the working days that we have in Germany, just to make sure that we have the best efficiency of the factories. But I think the government also will kind of have to play an important role in terms of reducing these energy costs, right? But I think it's a short-term problem. I still don't believe it's going to have a major impact in the performance of the group. That sometimes is also kind of helps because you have such a large group, right? So even if Germany didn't do that well, China, US, and all the other facilities will kind of make up for it. Luckily for us, the furnaces in Japan are electric. They're not on gas. So that's definitely a plus point. But definitely the higher energy costs have impacted profitability in both Germany and UK. But overall, the performance of the entire group still remains very strong.
Right. Next, we have a couple of questions which say that now you're a global entity. You guys have roots in glass-line equipment and now doing a lot more beyond glass-line. So how do you kind of create competitive advantages at a global scale in businesses outside of glass-line? And within glass-line, is there a way you're thinking of consolidating your current position, maybe even strengthening it as you go ahead?
Right. So we recently had a analyst day, which you were there for, Salil. And again, in glass-line, having a market share close to 40%, growing market share is not really something that we're really trying to do. Obviously, there are markets that we don't have a strong presence in, and we'll try and penetrate those markets. But the idea really in glass-line is to grow profitability. And we do it by 2 levers. One is obviously buying from India, so low-cost sourcing from India. And 2 is obviously operational excellence. Operational excellence just quickly is turning around the German and the Chinese facility, which we have done. And over time, these will even improve even further because the output will keep increasing, right? The momentum has picked up and it will continue to do so. In terms of low-cost sourcing, that's worked really, really well for us. We are just currently shipping out the last 6 vessels of a 28-vessel order that Germany has placed on India. These vessels will be stocked in Germany, in the plant in Germany. And as soon as a customer in Germany or any other part of Europe has a breakdown, we will ship out these reactors immediately. So 1, you get a premium. You don't have to wait 12, 15 months to get a glass-line reactor. And 2, you kind of help increase market share as well. And that's worked out really well. The budget for the entire year was about $4 million of India sourcing. We've already crossed that budget in the first quarter of this year, right? And we have I think the pipeline is close to about $15 million of Indian-made equipment going into Europe, right? So that's picked up really, really well, really, really been successful. And that's only Europe. There's Southeast Asia, there's US, that's also, that's ongoing. In the glass lines, in the non-glass line space, the idea is to grow revenue. Again, we have small businesses here that have a very low and small market share. So growing these businesses is much, much easier for us. And these are new areas that we are entering into. Systems business, like I said, also similar. So asset recovery is another big area for us. We recently received a large order, about 23 crores from Hindalco. So this is completely a new business area for us. So they had the alumina plant, they had the captive, the power plant where they had sulfuric gas going into the atmosphere. So they wanted to kind of capture this and convert it into sulfuric acid. That's where our plant comes into play. So they signed a contract with, I think, a US company who in turn gave us the sulfuric acid concentration plant. And if this works out well, they have 9 more of these plants. So this could be a new industry that we never even kind of thought about or catered to, right? So there's multiple things that are ongoing. And then with this new acquisition of Hydro Air Research, we're trying to enter some of these new age industries, right? So the lithium extraction, mock meat, right? So we're working with Impossible Foods and guys like that. And once you have one successful installation, then many of the other guys will just kind of come back and say, listen, I want the exact same thing that you sold to so and so. Bioplastics again. So these are all new age industries, green technologies that hopefully over time will pick up, and those would be nice growth areas for us. And then lastly, on the services place, and this is just for a context, services account for about 40% of revenue in the international business. In India, it's only about 10 or 11%. So in India, we want to grow services, but internationally also services will become profitable because 1, we will source spare parts from India, and 2, we made some recent acquisitions, one in the US, to really grow our services business, right? So overall, that's really the idea. And when we add new businesses, it'll fit into one of these buckets, right? And then either it'll help improve profitability or it'll help improve revenue. And like I said, the growth areas are the systems and the non-glass end business, because that's where we have very, very small market share.
All right. You mentioned
just one clarificatory question to Tarak. So Tarak, if you guys make glass line equipment in India, that can be sold in Europe, right? It doesn't need clearance from the European regulators because the European pharma industry or the European chem industry will use it.
No, so we have all the accreditations, sort of. We can pretty much supply anywhere in the world. We can supply into Japan. We have GIS. Into Europe, we have the DIN and the CE marking, and in the US, the ASME. What's also worked out really well for us is we've been liaising with the government to get approval. See, every glass line equipment, because it's dual use and can be used for the wrong stuff like chemical weapons and things like that, needed approval from the government of India. They would actually call a meeting at DGFT and they would get at least 5 or 6 different the departments coming in and signing off. But now we've got clearance, a blanket clearance from DGFT to basically that when we supply into any of our group companies, we don't need this license, right? So that's a huge breakthrough for us. So now that we are supplying these 28 vessels, we don't need to let the government know beforehand where these vessels are going. We only need to tell them once they are sold, and we just tell them which customer has bought it, right? So it's a huge breakthrough for us. Otherwise, we would have to wait for an order. We would have to give them a name of a customer, what this customer is going to be making, and they would go through maybe 6-7 month kind of a window to kind of get clearances for this.
And just to therefore clarify further, other Indian glass line equipment manufacturers, I presume they don't have all the global accreditations, and they clearly won't have the sort of government waiver that you were just discussing.
Yeah, so that's probably right. There's only one Indian manufacturer who has a factory in Germany, might get it for Germany, but definitely not going to get it for the rest of the world, right? But that also, I think right now, it's only the approval that's come is only for GMM Pfaudler. And we have the ability to basically supply to any of our facilities around the world.
Very interesting. Salil, back to you.
Right. So Tarak, on the response to the earlier question, you mentioned mock meat is something which you're working with. And I think there's a lot of curiosity that some 2-3 people asking that what exactly are you guys doing with mock meat? It doesn't seem to fit anywhere into the product portfolio.
Yeah. So this company that we bought is basically in membrane separation technology. And this is how you create protein from different kind of, so you need to get that same kind of feeling of meat, of blood, of milk. And that comes from these different chemistries, right? So you want that kind of redness to come into the meat, a little bit of that blood dripping. I know it sounds a little bit not very nice for vegetarians, but that's exactly how you make mock meat, right? You want it to look, feel, and taste as close as possible to real meat, right? And this is where the membrane separation technology comes in. The other area that this company also does a lot of work is in the penicillin. And maybe this is a nice story here also for all your viewers, is that recently there's been a big push to make penicillin here in India. So we used to buy all our penicillin from China. The government of India has launched a PLI scheme to make Pen-G here in India. There are three massive plants that are up and coming, two in Hyderabad, one in the north. And we've sold mixing systems to all these. And our orders are in excess of maybe 60, 70 crores of rupees, right? Only for penicillin and only for the mixing, because these are all large fermentation tanks, right? 3,000, 4,000 cubic, or 400,000 cubic meters, right? Wow. And again, we were the only company in India who had technology. The other two vendors were from Europe, and because they didn't have local manufacturing, again, from a cost competitive standpoint, we were much, much better. But if this was a business that were to grow, we would definitely have a very strong footing here. And then after making Pen-G, there's, and you make antibiotics and stuff, that's when these membrane separation technologies come in.
Okay, great, interesting. I so hope viewers have have the answer to that curiosity. Tarak, one question, I'm sure you must be answering this almost every day and maybe even discussing it internally, is there are a couple of questions on demand in the end user industries, right? So China dislocation, it's been talked about. There apparently are two schools of thought. Somebody says that it's going to be decades before there's any meaningful shift happening. Others think it's not the case. And now there is also this talk of Europe plus one, right? There's a new kind of concept which has come in. So if you can, when you think of end user demand, where do you see chemical pharma, say, over a 5-year period?
So I think we are bullish. I think chemical continues to remain very, very strong here in India. I think Indian companies have now reached that size and scale where they'll continue to grow. I meet with the CEOs and owners of most of these big companies, SRF, PI Industry, Deccan, Davies, on a regular basis. And I think all of them have investment plans that will kind of pan out over the next few quarters. Pharma has been a bit slow, to be honest with you. Chemical is really driving a lot of the investments here in India. Pharma in Hyderabad area has been decent, but again, for the rest of the pharma, I think they have definitely slowed down. But I think over the next maybe a couple of years, there should be a picking up in terms of pharma. What's interesting for us is that the rest of the world has seen significant investments, right? So Europe and US, and Europe more so, has seen significant investments in pharma and in chemical. Like I mentioned to you, our Swiss subsidiary, which is about a 25 million Swiss franc, has a $43 million backlog. That's like a 2.5-year backlog, and they're still getting new orders, right? So people are planning for 3 years. Most of our Pfaudler units have a 9 to 12 month backlog already, right? So there's investment definitely there, and this is something that we've not seen in the past. Will it continue for a long time? We all hope so, but with the uncertainties in Europe, I'm sure that things might kind of slow down for a bit. But I think over the longer term, I think you will still see investment. We've been hearing stories of the French government, for example, saying things like, just set up an API plant, and I don't care what you manufacture, just set it up, right? So that's the kind of sound bites that we're getting from Europe. And China still remains the world's largest producer of chemicals and will do so, right? So I think China will come back stronger. But then I think the push here in India is always to be self-reliant. I think people have realized that they were over-dependent on China. I think they will kind of build and backward integrate. So I think from a business standpoint, I don't see a really, downward cycle in terms of investments. I think that will only go up.
Just Tarak, if you don't mind my stepping in there, these long order books, these backlogs that you guys have. Obviously, when we first researched GMM 4 years ago, that was one of the things which gave us a lot of visibility on the sheer strength of your franchise. But just sort of thinking ahead a little bit, if you sign up today and you actually deliver 2 years hence, right? And say in that interim period, raw material prices go up, are you able to pass that on to the customer?
Yeah, so in Europe, definitely yes. It's built in. They have these escalation clauses. If there's a change of 5% or more, they can definitely go back and talk to the customers. But again, most of these are done on job work costing basis. It's not a price list. So they will do a costing. And then based on that costing, they will order the material at the, very quickly after the order comes in. Maybe the material will not be delivered immediately, but will come in exactly when they need it, right? But in the case of Switzerland, most of the work is done here in India. About 70% of the manufacturing is done here in India. So from that standpoint, we make sure the material comes in pretty early. So there's not a big impact if the material costs were to change significantly.
Nice. Salil, back to you.
Tarak, one piece, there are a couple of questions on this is, in these acquisitions is about integrating, say, research and development, right? So if you can give a sense of how this was done earlier, so R&D and engineering, right? Because these are all customized jobs. How are you doing it, say, before Pfaudler became a subsidiary? And how is that changing now and into the future?
Yeah, so that's something that we're working on. I think early on, every country or every geography did their own R&D. And India would kind of wait for something to be developed internationally, and then we would ask them for it, right? So that was pretty much what R&D we did. But today, I think there is a definite push towards moving R&D and engineering both to India. And from an engineering standpoint, I think we want to build a kind of a resource here in India that can kind of support the entire group. It should not be something that's, for glass line or for non-glass line. It can be something that will for the entire group. So it could be a systems, kind of a drafting of engineering drawings. It could be P&ID calculation. I don't know what, but that's something that we definitely want to do. Move an engineering office. I think good company, Sulzer has done it for many years. I think that's one area that we can definitely save costs. And then to move R&D to India as well is another area that we believe, can really help us save a lot of costs. Talking about R&D, I think R&D is something that is very important for us. We are currently working on some new launches, especially in the glass line. And I think I've spoken about this. We have this new glass that we are working on. It's called the Smart Glass. This is an ESG-friendly glass. So the current glass has heavy metals in the form of cobalt. The new glass that we plan to launch will be heavy metal free. So none of the heavy metals will be part of the customer's final product, which obviously is great from that standpoint. Plus, from an environment standpoint, much, much easier to dispose of or to recycle, right? So I think that's something that hopefully in the next couple of quarters we'll be able to launch and would give us a definite edge compared to the competitors, because it's something that we will be the first in. It's going through the final test in terms of corrosion resistance and things like that. But we are quite confident that this glass will be something that will kind of be a game changer for us.
Salil, you're on mute, Salil.
Yeah, sorry. Is there some, say, IP protection for all of these new, do you quantify, let's say, there are any patents that you file?
Yes.
If you can.
So we have patents for all the new, yeah. So I don't have the exact numbers at the top of my head, but most of these have been, a few years in the works. So we have worked with universities and with, the technical institutes. We have IPs and patents formed for all of them. Obviously, sometimes our competitors would bring something to the market which would be similar to ours, but not have the technical specifications that are the same. But that's something that we'll have to sell and speak about. But generally, for most of our, new technologies, we have IP and patents in place.
Great. Tarak, now, one question Ashwin already asked you this on increasing the management bandwidth, right? And you explained how you guys have gone about doing that. Now, one question that has come is on, say, the next generation or the next level of leadership that the GMM might have because of the sheer scale and breadth of your operations. So at the board level or at the top management level, how are you thinking of, say, shaping the next generation of leaders? And are there any conscious efforts being taken on building a culture? Because Germany, Switzerland, China, India, there's going to be a lot of diversity from that point of view.
Yeah, sure. So maybe starting with the board, we've completely revamped the board from 2015 onwards. The earlier board was very transactional and we used to have meetings and the whole meeting was spent on really just signing off on the accounts and things like that. Today, the board is much more involved in strategy, into long-term decisions, M&A opportunities and all of that. So we've really professionalized the board now and we plan to do it even more. We have a new vacancy opening up. And you guys have worked with our ex-chairman, the Dr. Sivram, again, somebody who's been with us for a long time. He retired recently. And now we've taken on board the chairman of Kotak Bank, Mr. Prakash Apte. He will take over as chairman. So we have a very strong board in place. In terms of management, this is the first time in the history of GMM Pfaudler India, 60 years of our history since we got incorporated, that we now have a professional CEO. Aseem Joshi joined us about a year ago. So the day-to-day operations of the company have been left to Aseem and Manish, our CFO, and they're doing a fantastic job. Sorry, what was the last part of it?
It's on culture building, right? So it's diverse operations across the world.
Yeah. So on a culture building, we recently also launched our global brand architecture. So starting with a common brand for the group, the main decision was, should we call the new company GMM Pfaudler? Should we call it Pfaudler and then have Pfaudler India? But it was nice that everybody wanted to bring both the companies together, GMM and Pfaudler. And now every company across the world is known as GMM Pfaudler Italy, GMM Pfaudler India, GMM Pfaudler US. So that's really, really nice. And people love the new logo. They resonate with it. And it's a really nice, clean, fresh look. And along with that, we kind of launched a kind of a brand, how do I say, like a theme, right? So it's something that we call big moves. And now we're kind of trying to bring that big moves into culture and how it's going to impact the way we behave both externally and internally, right? So that's something that we're working on. And I think that's something that Pfaudler probably did not have much of. So HR and culture building was something that was not done at all. And that's one thing that I believe personally is an area to get people to really kind of feel and kind of be part of the organization. We need to spend more time in. And that's something that we will definitely do. And hopefully, we can bring these people into one common kind of one Pfaudler, one GMM Pfaudler environment where they all strive towards a common goal and a common vision.
Great. Folks, we have time for one last question. So Tarak, this is, again, 2-3 people have asked this. Amit, Anirudh, being 2 of them. It's a question about how are you kind of spending your time? You have answered in parts about how the leadership is building up. So one is specifically, how are you spending your time? And second, more specifically, is from a risk management point of view. And one is, what risks do you see that need to be monitored? And how are you putting in place a framework to kind of mitigate or control them?
So I remember Saurabh telling me that I should parachute into these different geographies and then kind of do the same thing that I did here in India. I remember you coming to my office and telling me that. So unfortunately, I haven't done that yet, but I've definitely gone and visited these facilities a lot more. But again, I think it's important that, my time gets spent on really long-term strategy. Having a long-term vision document, that's something that we just came out with a few weeks ago. So that's something that is now done. I will now spend the next maybe few weeks kind of aligning the rest of the organization to this vision document, kind of getting it more granular in nature and understanding what we're going to do in these different areas, regions, and platforms. We also completed some acquisitions, like I mentioned, the balance 46% of Pfaudler International being a related party transaction. That was something that had to be very much above board, transparent. So we spent some time doing that. That took a bit of my time. But I think going forward, I think the push is going to be obviously to grow market share, to grow revenue, to grow profitability. I think we've reached and we built a strong foundation now. And some of these HR software aspects is something that I would like to spend my time on to really motivate the team so they kind of, go a little bit of the above and beyond their normal. I think they've been kind of used to staying below the radar. I think a little bit of push to help some of these people to kind of really, stand out. I think that's something that will help the organization in the long term.
And risks, would you like to comment on?
Yeah, sure. So on the risk front, again, I think that, we have quite a strong risk framework in place. Obviously there are risks associated with new products or new technologies that could replace glass lines. So we are kind of at the forefront of that. So we are already working on continuous flow reactors. If the batch process were to kind of change to continuous flow, we have something already in place. We're doing trials for new technologies. So we're always, kind of working there and trying to kind of increase and enhance the product portfolio. From a risk standpoint, particularly an operational risk standpoint, obviously the current situation in Europe is a bit of a dampener, but hopefully that would kind of, be correct over time. But generally, the other risks that we have in terms of safety, in terms of, I think our standards are quite, high. So I don't see that as a major risk, and we don't have any hazardous material that we're dealing with on a regular basis. So I think otherwise, I think we just need to focus on maintaining cost, making sure that we don't increase cost significantly. And we look at low-cost countries to build and create more manufacturing capacity, and over time reduce manufacturing capacities in high-cost countries. I think that's really going to be the driver for us.
Great, Tarak. As always, it was really great speaking to you. Thank you so much.
So Tarak, I was going to suggest, given how hard you guys had worked, that perhaps a go off-site for the entire consolidated GMM Pfaudler group is warranted. But then I remembered you're a scuba diver. And even an amateur like me, I've been snorkeling in the Andaman and Nicobar Islands once. It's gorgeous. So we hope that the entire consolidated global team of GMM Pfaudler gets some well-deserved rest and hopefully a great
So it's a large team now, so it's going to be quite expensive. So we'll wait for margins to improve a little bit and then kind of do it. So maybe in the next couple of years.
So that ROC and that margin will only go in one direction. Thank you very much for your time, sir.
My pleasure. Thank you, everybody. Nice.
Thank you.
Bye-bye. Thanks, Tarak.